Can you hear me? You're muted, Shaquana.
Can you hear me?
Yeah, I can hear you.
Okay, perfect. I'm gonna try to connect because I'm in my office because, of course, as I explained, I'm just getting off the plane and I came straight to my office to work. So I was trying to leave in time. So what I'm going to do is try to connect my AirPods because they're taking calls and so we got to get it done.
It's all good. It's all good.
Gotta get it done.
Appreciate you for being so dedicated. I know you just landed. I ain't gonna lie, I knew you was flying in today. I would have definitely asked you to just wanted to reschedule.
I didn't even, you know what? And I seen it yesterday and I was like, it's too late to even, say something. So I was like, oh, we'll just get it done.
Well, that's good. Thank you. Appreciate you for being dedicated. Like I said, everyone who is in here on the webinar, in the Zoom, let us know where y'all tapping in from tonight. Appreciate y'all for joining us tonight. We're going to start our Tax Talks Tuesday today with Miss Shaquana Brooks, aka Miss.
Can you hear me?
Yeah, I can hear you.
I can't hear you though.
You can't hear me?
Let me come out and come back in because this, I don't know.
Everybody else, can y'all hear me? If y'all can hear me, please drop some gems. Drop the gem emoji if you can hear me. What's up, Baton Rouge in the house? Hey, appreciate y'all. Hello, how y'all doing? Baltimore, shout out Baltimore. I see Kevin in here. We got Erica. We got Tulsa, Oklahoma. We got New York. Shout out to everyone who is tapping in. We got V8 Beach, Georgia. We got Detroit, Cleveland, DC. We got Dallas in the house. Shout out to Dallas. We out here in Dallas. I see we got let's see where our people on the YouTube tapping in. Shout out to all the YouTube live viewers too. Can you hear me now, Shaquana?
Yes, I can hear you now. I think my volume was just down. Can you hear me?
Yeah, I can hear you.
You can hear me fine?
Mm-hmm.
Okay, because I put my AirPods in. Okay, perfect. Okay, all right. Okay.
This is your portal link. This is how I see it on my end.
Got Houston in the building. We got Jacksonville, Florida. We got Arkansas. We got everybody. We got the whole nation tapped in. Appreciate everybody for tuning in tonight. Wherever y'all coming from, thank y'all for showing love. Thank y'all for supporting us. We put this together to help y'all out. If you're business owners, even personal taxes, just trying to help you guys out. Make sure that you are prepared. Make sure that you're filing correctly. Make sure that you're filing on time. And what you should do if you are not filing on time, how can you prepare for that and make sure that you're not paying the most amount of money possible?
Absolutely. This is a big week, especially for S-Corp partnership. We
explain to us what's going on.
Deadline 3/15. So March 15th, S-Corp partnerships, all of that has to be filed. So there's going to be a lot of extensions going in. And as a disclaimer, I guess before I start, I kind of want to just throw this out here. I have actually stopped accepting clients for this tax year if they need to have their taxes filed by those original deadlines of the 3/15 and 4/15. However, if people would like to file with me, then that is still possible, but they will have to file an extension, and then we will, of course, make sure that their taxes are done before the extension, because we are like, it's a lot going on. We have a lot of clients that we have to get to.
Question, why would someone say, okay, I absolutely need it done on the 15th? Are there certain rules that you mandatory need it done on that date?
Yes. So if you are a partnership, a 2+ member LLC, or an S Corp, your deadline to file your taxes is March 15th, and the penalty for non-filing is $195 per month per member. right? So it becomes very expensive for you to miss that deadline.
And that's even if I file an extension?
No. So if you file an extension, then you don't have to worry about that. You don't have to worry about, paying the penalty of non-filing. Now, if you file the extension, which a lot of people do, and then still don't file your taxes, then of course you're looking at those fees again. But that extension, just to explain to everyone who is not aware of what an extension is, when you are just like, listen, I'm not going to make that due date. I need an additional 6 months. You can file for an extension and get an additional 6 months to allow you to file your taxes. Okay, so that's pretty much what that is.
With that extension needs to be filed before the 15th. Is there a deadline on when the extension needs to be filed?
Yes, so it allows you an additional 6 months. So if you are a 2+ member LLC, a partnership or S corporation, and your deadline is March 15th, and you file for an extension, then it won't be due until September 15th. Now, I did see someone in the chat say, what about single member LLCs? So if you are a single member LLC, a corporation, or your personal taxes, and you're like, listen, I'm just not going to make this deadline, I need an additional 6 months as well, you are also able to put in for an extension to allow an additional 6 months. That additional 6 months will allow you to file your taxes by October 15th. Okay, so those, that's very important because, again, wasting money, right? You're wasting money by not being in compliance. And that's what it's all about, right? Just knowing what you need to do to be in compliance. No. So single member LLCs, if you are single, I'm sorry, I'm looking at the chat. So the question is March 15th, the deadline for single member LLCs. So single member LLCs, you have to file your taxes, your business taxes with your personal taxes. So if you have a single member LLC, please do not file your personal taxes before you start filing your business taxes. Okay, so that is very, very important for you to know, because I have a lot of people that I have to file an amendments for so that we can include their business inside of their personal taxes. So because you have to file your business taxes with your personal taxes, then your due date is April 15th. And if you file for an extension, then your due date will be October 15th. Okay, so I hope I clarified that.
And that's only for single member LLCs. You have to file your business and your personal together, correct?
Yes and no. So if you are a single member LLC, yes, you file it on one form, right? You have to file your personal and your business together. However, if you are a 2+ member LLC and an S corp, or S corp or partnership, the reason why your taxes are due earlier on March 15th and it's not on April 15th is because you have a form. You have to report whatever income you make from that business on your personal taxes. So how it works is you will receive a K1 from your business. So if you file your S corp taxes or your partnership tax or whatever, you are going to receive a K1, and that K1 is going to have whatever the profit of your business is. So let's just say it was 2 people and they were operating at a profit of 20,000 and they had 50-50 ownership. What would happen is that both partners will have what's called a K1, and they're both partners K1 will have $10,000 on the K1. And from there, that $10,000 has to be reported on their personal taxes. Okay, so that's why they call S corporations, partnerships, and 2+ member LLCs and LLCs, all of those things. That's why they're all called pass-through entities, because all of the income that you make on the business level passes through to your personal taxes and then it's taxed there. Okay, so that's why, you can, like if you have those entities as well, you have to make sure that you're including your business. Okay, whatever your K was on your K1s, you have to include it, because once those K1s are filed, the IRS now knows, hey, well, this is the amount of money that's coming from this business. It's just like having a W-2. Now the IRS knows, okay, well, this is how much money you made. When you file your business taxes, now they know, okay, well, we're expecting to see this income show up on your personal taxes. So if you don't do that, then that's when, you have them reaching out to you saying, well, you've reported this amount of income, but we have this amount of income on file for you, and then it becomes, here's the penalties and the fees. And we waited 3 years to contact you. So here's all the interest and penalties, for all that time. So it is important to, again, remain compliant and file your taxes properly, because it is very, very important.
So I got two questions off of that. So
Yes.
if you don't have your K1, like if you are in a partnership, or like you said, an S corp or anything, if you don't have your K1, do not file your personal taxes, is what you're saying, correct?
No, you have to wait for your K1.
Okay. And then the second question is, what's a typical interest rate you'll see the IRS issue whenever people are back? Is it like whatever the national interest rate is? Like, how do they figure that part out?
So their interest rate changes every year, but typically it ranges between 0.5% or like 1.5%, but that's compounded daily. So theirs isn't like, it's compounded daily. Yes.
Oh, wow.
Yeah, so it's compounded daily. So that's how, like, when people owe the IRS is just so much, they're like, oh my God, I owe all this, all this money, in interest. And yeah, that's why. Yeah. So yeah, it's important not to owe them. Yeah, they're different.
Yeah, that's some big sharks for real. So I'm glad we're talking about like just business and the deadlines and everything. And I kind of want to get on how being in business can actually be beneficial with lowering your taxable income, just the way that America is set up for the business to benefit.
So, I mean, we all know that tax code is set up for businesses and investors, right? That's without a doubt. And again, it's set up that way because taxes is an incentive. It's a series of incentives. And if you pay attention, whatever the government wants you to do, they give you a tax incentive so that they will lure people to do that. If they want people to build more housing, they give more tax credit towards real estate. If they want people to, if they want something done in health, then, or in tech, like there's a big research and development credit, right? Because they want people to develop things. They want people, in tech to do things. And those things are extremely important to pay attention to. And so, if you are going to have a business, you have to make sure that you're using it to your advantage. Because again, like I always say, I always say this, the benefit of having a business is that you get your money, you pay your bills, and then you're taxed later, versus having, W-2 income. You get your money first, and, you get your money, you're taxed on it, and then you spend what's left. So what happens when you have that business, and to make it work for you, you have to make sure, one, you are setting up your business correctly, because that's important. A lot of people want to take advantage of having a business, but they're not setting up their businesses correctly. So that is one thing that's important, right? You need to register your business. You need a tax ID. You need a business bank account. You need to make sure that all of those transactions are flowing through your business bank account. You also need to make sure that you're holding on to your receipts, right? So you first need to know what you need to do before you start, people start talking about like, oh, I want to save all this money by, reduce my taxable income. You first need to understand, like, yeah, you can write all these things off, but guess what? The whole idea is that if the IRS came to you, then can you substantiate, can you verify that these are actual business transactions that occurred in your business? And so those are the ways that you want to make sure that you're doing that, right? So now, in regards to, just having those things, being able to write, how you can do it. I like to tell people, think about your business on a day-to-day. In order for an expense to be a write-off on the IRS guidelines, it has to be necessary and ordinary in your business, right? So what that means is, if it's necessary for you to pay for a Zoom subscription, right? It's necessary. Without this, your business would not be able to operate. You need to make sure that you are, one, you paying for it in your business bank account. Two, making sure, I mean, it's easy because it's an electronic receipt, but if it was not an electronic receipt and it was a paper receipt, you were holding on to that receipt. And then you make sure that that's included in your bookkeeping at the end of the year, right? Because again, when the IRS comes to audit you, the things that they ask you for are your general ledger, your trial balance, right? They ask you for your bank statements and they ask you for the receipt. That pretty much is them saying, okay, the transaction happened in your bank account. However, we want to see where these income line items, that's where the general ledger and the trial balance is going to come in at. That's bookkeeping. And then they want you to show them the receipt, the proof. So it's, it's bigger than, a lot of people will say, oh, I just want to, I'm going to just have the transaction happen in my bank account. That's not good enough, right? Yes, it's showing in your bank account, but it actually needs, the detail of it on that receipt needs to show, so that is extremely important.
So I got a question with receipts. I'm pretty sure you see a lot of crazy stuff. People probably come to you with like a shoebox full of receipts, but I know that's not like ideal. What's some of the best tips or practices you might offer your clients to actually keep up with their receipts throughout the year so they give it to you as polished and as organized as they can?
Okay, so let me tell you what I do. So what I do is to make sure that I am keeping my receipts organized and making sure that I'm not forgetting to, capture a receipt so that when it's time to write it off, I have my support. Because again, the reality is receipts crumble, they fade, they get lost, you forget about them. I love QuickBooks because QuickBooks allows you to take a picture of the receipt and attach it to the transaction. So what I do when I'm getting gas or when I go out to eat, I'll show you my phone right now. What I do is I take a picture of the receipt. After I take a picture of the receipt, I have a folder in my phone labeled receipts. And I just put it in there so that way when it's time for me to attach it to the transaction, I already have it. Right? So hold on 1 second. I have to find it. So like, I don't know if you guys can see it, but this is like my little photo album, right? And so these are my receipts. So when I go out to eat, those are my receipts, right? I take a picture of them because I'm going to lose them. I'm horrible. My pocketbook consists of 9 million receipts. It's just too much, right? So what I do is I take a picture, I save it on my phone, and then from there, what I'll do is, I'll attach it to the transaction in QuickBooks. So it's easier that way, right? And that is the best way because the reality is I don't necessarily need every single receipt to file your taxes, but the IRS is going to need every single receipt or they're going to disallow the expense that they allow you to write. I mean, that you claimed when you were filing your taxes, right? So that's so important.
And this will be in the event of an audit, correct?
Yes, if in the event of an audit, which isn't highly likely, like I don't have a ton of clients getting audited, but I always, I have to, my job, and I always tell people, I feel like when I encounter a lot of clients, I'm encountering them in a space of just starting a business, so I have to let you know what it is that is required. What are the requirements? What should you be doing? If you decide to listen to me, great. At least I know I gave you everything that you should know. But, that's important because these are the things that you should be doing.
And I like that you show them that, and you got us using QuickBooks too. And I definitely got a folder in my phone where I keep the receipts and the gas receipts and everything. And I have a quick question because you mentioned whenever you go out to eat, and you also mentioned that it's necessary. They won't write it off unless it's a necessary expense. So when do those lines kind of get blurred? You might have some people that be like, I want to eat out here, I want to eat out there, and I'm going to try to write all of this out on my business. Like, when do you know that me going out to eat, this was a necessary expense for my business? Or how do you justify that?
Well, I don't know, because I always go out to eat, so it's always necessary for me. to talk about business, okay? And so first of all, if food isn't included, then it could have been a Zoom call, okay? We need to talk about business in person. It needs to be over some food, okay? So for me, and I think it is all relative, right? And this goes to the IRS just saying, okay, well, after you reporting a loss in your business for more than 3 years, your business is considered a hobby, right? And so that's where those things come into play, because for me, I'm making money. I can justify and say, okay, well, I took my client out to a dinner and we were discussing, business. That's a very different thing than someone, not making any money, but then, may want to write off $30,000 worth of food. It's like, against what income? So things become very relative. And I always tell people, could you sit in front of an IRS agent and tell them that this makes sense? And if you feel that it makes sense, then you can argue it. Doesn't mean that they'll allow it. But it is one of those things where you have to consider it. Like, consider, does this really make sense? And the IRS is not going to allow you to keep doing that for much longer. And if, again, I tell people, if it's an expense and it's an actual expense, write it off. It's a tax law. The tax law is literally 85% of how not to pay taxes and about 15% of how to pay taxes, right? So, and I say that to people all the time. You can't be afraid to justify an expense that you're allowed to take. But what you do have to do is make sure, as I mentioned from the beginning, that all your ducks are in a row. So if in the event you were ever audited, everything is there.
That's important. Yo, if y'all don't gain anything, make sure you have a paper trail.
Yes, that's what I tell people all the time. That paper trail is going to trump everything. You have to make sure your things are documented. That's why people always say, oh, do you think I should pay this person in cash? I'm like, no. If you have an option to pay them in another form, pay them in another form, because you want to be able to document those things, as you want to be able to document as much as possible.
And I want to get into that, but I see we got a question in the Q&A. If you have multiple businesses, should you file one business with personal taxes, or should you file each business separately and on a personal income tax for LLCs?
So should you file them should you file them all together on your personal taxes?
If you have multiple businesses, should you file one business with personal taxes, or should you file each business separately and a personal income tax? So I'm guessing they're asking, should I file individually through each LLC and then file my personal taxes?
Your business entity dictates how you file your taxes. So if your business is a corporation, you would file your taxes separately, and pay to your taxes separately. If you are a S Corp, or if you are a 2+ member LLC or a partnership, then what happens is you file your taxes separately, and then you report what's on the K-1 on your personal taxes. If you are a single member LLC, then you are going to complete the form. We're going to complete the form on your personal, in conjunction with your personal taxes. So your tax type, your entity type dictates how you file your taxes. It's there's no other way around that.
Well, thank you so much for answering that. And you were talking about, leaving that paper trail, paying people. And I know sometimes you hear a lot of people saying, if it's under $600 expense, I don't have to pay taxes on paying this person or anything like that. What's your take on that logic? And should people, like you said, people need to be keeping a paper trail, even if it's under $600 on paying people, correct?
Yes. So the requirement and where that comes from is if you are paying contractors and you pay them less than $600, you are not required to issue them a 1099. Okay, you're not required. However, you can still write it off on your taxes. And that doesn't mean that you're not going to be audited. It just means that, you're not going to be required, right? So again, and let's say in the sense of a contractor. So no, you're not required to issue that 1099 to them. But if in the event you were audited, then you would have to provide a receipt, the fact, how you pay them to justify the expense, and so that's important. I feel like people hear things and they pick and choose what they want to take out of it, or they make their own story up. But yeah, so that's what,
their own tax code.
yeah, they start writing their own tax code. But yeah, so that's what that is. Just, I mean, to kind of keep it simple, if you are doing something and you want to include it on your taxes, you should try to make sure that you have as much documentation as possible. Okay, because again, the chances of you getting audited is slim, yes. But if in the event you do, then you don't want to have to deal with the IRS and the penalties and fees and the interest and them contacting you and hounding you and freezing your accounts and putting liens on you and all of that. It's just too much.
No, I'm with you. I'm with you on that one. And so I want to kind of move on to people that may have made more money and they're moving up in tax brackets and things of that nature. How does that affect you whenever you start bumping up to tax brackets? Maybe, what's like the lowest tax bracket? How much would you need to make? It's
Sorry,
like
what
20.
did you say? How much is the lowest tax bracket?
Yeah, like 20,000.
So it depends on how you're filing. If you're married, filing joint, or if you're single. I mean, the lowest tax bracket is 10%, right? And that's, if you're single, then that's you making anywhere between, let me see, hold on. I'm gonna pull up the thing because I don't want the numbers, or it's a lot. So you want me to go through every single tax bracket? Okay, so listen.
We don't have to
Okay, lowest tax bracket is 10%, right? And if you're single, that's you making anywhere between $0 up to $9,950, right? And then I'll just go through the 10% bracket just so that I'll just kind of show the difference in terms of income. If you're married, filing joint, it's anywhere between 0 and $19,900. If it's married filing separately, then it's up to $9,950. If you notice that single and married filing separate is going to pretty much have the same tax bracket rates, as well as standard deductions as well. Okay, so if you're head of household, it's up to $14,200, right? So anybody making that between $0 and those upper numbers that I just mentioned based on your filing status, then that is how much you will you'll only have to pay 10% on your income, right? But then it goes up, right? You just mentioned people making more money, right? Because now people have jobs, they have side businesses, they have a lot going on. And so again, so when you're talking about making more money, you can fall in between the 12% or 22% or 24%, right? 32% is you making anywhere between 164,000 and 210,000, right? So you just have to, be mindful of that. That's 32% of your money. If it's 24%, that's between 86,000, right? What is it? 86,000 and 164,000, right? So again, if you're kind of in that $90,000, $100,000, you're kind of looking at 24% going to taxes. And that's just talking about federal, right? We're not talking about state taxes. Every state has their own taxes, or your property taxes or your sales taxes or your income taxes. Yeah, there's so many taxes. And so
they tax for everything. And I'm glad we're talking about like the rates, because a lot of people don't account whenever they're paying taxes. Like you said, the sales taxes, the property taxes, and the other taxes that come along. And they don't realize that if you're not careful, if you really start to make enough money and you're not operating the correct way, you could be paying more than 50% of your income in basically just taxes.
Yes. And that is so important. And so that's why, I always preach, like, you have to have someone that you can communicate with and say, hey, this is like, do some tax planning with. That's important. Because as you make more money, your situation in 2020 may not be your situation in 2021. You may be making more money, you may have come into some more money, however it goes. Your situation may be different, and you need to be able to say, hey, well, what am I looking at from a tax perspective? How can this change? What can I do? Because the reality is, in tax planning, all it is you figuring out ways legally to take your income, create those expenses underneath your business, right? So that it's a situation where you're reducing your taxable income. So that is so important.
So I have a question. Is being in business, what if it's someone they don't have a business? What would be ways that you can decrease your taxable income? Are there ways around like just being a person and you being able to decrease your income?
There's ways like you can contribute to a traditional IRA. And I want to make that clear because I have a lot of people that new clients that'll come on and they'll be like, oh, I contributed to my Roth IRA. Can I use that as a tax deduction? And the answer is no. So a traditional IRA, you can use it. You can contribute to it and use it as a tax deduction. But a Roth IRA, you cannot, right? So that's one thing. If you are a teacher, right, you get a credit of $250 that you will tax deduction, right, that you can use. If you have, let's see, what's some other things that I can think of. If you're paying student loan interest, right, that's another thing. If you have a home, the interest and the real estate taxes is also a write-off. Those are things that you can use to your advantage if you are just having your personal taxes. But I'm just going, I'm always very honest. It's nowhere near as plentiful as you being having a business or you being an investor. And so that's why, I always preach everyone doesn't have to be a business owner. Being a business owner is tough. I.e., why I just came back from vacation. I had to get my mind right. It was a lot. I was under a lot of pressure. But everybody's not meant to be a business owner. It's a lot, but everybody should find ways to invest. I do believe that. I do believe that that is extremely important.
And I love that you touched on that. And we got another question in the Q&A. Says, I'm a new business owner of a restaurant. I'm doing sales and use tax, and I just don't understand how it's done. How can I pay less tax monthly? I have a LLC single owner restaurant. I don't.
Okay. So a few things. First thing is when you are a restaurant, you have to consider, sorry, when you are a restaurant, you have to consider a few taxes, right? You have to consider your income tax. You have to consider sales tax, right? You have to consider payroll tax. And some of those things are constant, like they're not going to change. For instance, your sales tax. Sales tax is not going to change because technically that's not your money, right? So what I mean when I say that's not your money, you're pretty much working for the state. You're collecting their money, and then from there, what you're doing is you are just giving the money to the state. So like here in New York, the sales tax is 8.875%. So on top of, let's say if you're in a restaurant, you sell a dinner, you pay an additional 8.75%. You have the client or the customer, yeah, you're just supposed to hold it and then give it to the state. So technically, there's no way to really reduce that because technically that's not your money to begin with. It's really just have you working for them for free. That's how I like to kind of look at it.
So question,
Right.
like a good way to look at it, like maybe everything that I profited off of that night, I'm gonna just automatically take that 8 point whatever percent out and just throw it into account to the side.
I tell clients all the time to take whatever that percentage is. Like here in New York, it's 8.875%. I'm just like, to make it easy, take 10% and throw it in the account, like in a whole separate account. Because what happens is, especially being a restaurant owner, I grew up in a restaurant. My dad has restaurants throughout New York. And so that's where I got a lot of my business experience from, with just like being in his restaurants and working in there. There's a lot of expenses. There's a lot of overhead. There's a lot of things that you have to do on a day to day. And, you want to make sure that you're not looking at money and spending money that's not yours. Right. So to kind of mediate that, what I tell clients is, maybe get 2 checking accounts. I don't really recommend a savings account because savings accounts have like a cap on how many transfers you can make like in and out of that account. But I do suggest clients getting like another checking account and maybe making a transfer over there. And when you make that transfer, just throw it in there. So that way, whether, depending on the state, some states have monthly sales tax filings requirements, and some have quarterly, right? So that way, when it's time for you to file, you're not even like, oh my God, how am I going to make up this money? And that money adds up really quick. I have clients that own restaurants that's owing like 30,000 a quarter, 30,000 a month, because they're making money, so they're making money. So they owe these taxes, but technically, when you're thinking about it, it's like, oh man, I have to pay these sales taxes. But technically, you don't really have to pay it. It wasn't yours to begin with, So that's the thing. And in regards to, entity type and how much money they're making, LLC may not be the right entity type. They may need to be a S corporation. They may need to be a corporation. It really depends on how much money you're making. One thing I know about restaurants is they make a lot of money. However, they do have a lot of overhead. So, there's different things to consider. Payroll taxes, anybody in restaurant, make sure you put in your people on payroll. That's very, very important, because restaurants are one of those things that they know cannot operate without people. So you can't try to contractor yourself to death, right? If they are employees, make sure that you have a payroll provider, that you're paying these people payroll, because you will get audited and it will not be nice. It will not be good.
So with the payroll taxes, does it differentiate state by state also how much you're going to pay in payroll taxes?
Yes. So they're standard. Well, from the employer side, no. You just have yourself. Your workers' comp may vary. So there's a few things when you are an employer that you have to pay, right? So for those of you who do not currently have employees, when you have employees, you have to pay your portion of Social Security tax, your portion of Medicare tax, which equals about 7.65%, on top of paying workers' compensation, right? So that could be 10%, and it really depends on how many employees you have. It depends on your industry, right? Those things you have to consider and you have to take into account. But in regards to the actual taxes that you have to pay, about 7.65%, that you have to pay. So it doesn't really vary. Only thing that really varies included in your payroll is like that workers' comp.
So you just told me I need to put at least 10% to the side for sales tax, correct?
Yes.
Another 7 to 10% for my workers' comp, payroll and everything. What's a good general around percentage, just to say, okay, if I'm a business owner, I at least need to have this amount percentage in the account. Does it vary on like you said, the type of business it is again, or do you give like a general, maybe like 25 to 30%, like just make sure that's what you working with?
So I don't give a general. So when clients come in, and that's a famous question, how much money should I put aside for taxes? And so one, I don't really like to include sales tax in that, because again, sales tax is not your money. Right? Sales tax was money that you collected that should have been put aside. So I typically don't like to include sales tax numbers, because that's not really taxes that's calculated based on the activity of your business, in a sense of like your income, right? So what I'll tell clients is, yes, put your 10% to the side for your sales tax. Outside of that, on your action, yes.
With the sales tax, and that's interesting too, because we got a lot of digital commerce going on right now. Some people, I don't even know if they got their taxes set up to where they're actually like taking out taxes state by state. I know a lot of the payment processors, they offered it, but you could be operating at a deficit if you don't set it up correctly, sounds like.
Absolutely. I have so many clients like that will have Shopify, and they will say, oh, I opted out. I didn't let them take the sales taxes and remit them for me. So yeah, I'm not paying sales taxes. And then they get into all these sales tax issues, because again, you have obligations. So, you have to find a way to streamline that, to make sure that you are collecting whatever sales taxes you need to collect, and you are giving these people their money because they are coming for you. You owe them money. So, you need to make sure that you get them their money. So just kind of back to, because I know this is a very popular question, so I want to make sure that I answer it just in regards to what people should put aside and what they should think about, right? And again, I can give something general, right? I would say about 25%, but I hate speaking hypothetically because I feel like hypothetically speaking gives people the the thought that they don't really need to drill down into their numbers and really figure out what it is that one they need to charge, right? Because this all goes back. Like if you're just saying, oh, I'm going to just put 25% aside. What if you fall in that 32% tax bracket? What if you fall in another tax bracket? What if, that's not enough? And again, giving blanket numbers like, oh, just put 25% aside, to me personally, just, tells people like, oh no, like, okay, just be okay with putting the 25% aside. That's not me. I want people to understand what they need to do. You need to know your numbers. It's important. It's very important. You have to know your numbers because you have to, one, say, what do I need to charge, right? What do I want to take home? In order for you to understand what you have to take home, you need to understand what you need to charge. If you know what you need to charge, then guess what? You'll be unapologetic about what you're charging because you have a goal and you know what it is that you need to charge in order to get where you're going. Two, taxes will be factored into all of that, right? So I tell people all the time, yeah, you need to get your taxes done, especially when people in real estate, when they start all these LLCs and all these different businesses and, they have all these different entities. And it's like, yeah, no, you have to pay for all of that. So guess what you do? You factor that in your costs when you're charging rent. When you're selling a t-shirt, factor that into your costs. Like really start looking at what it costs you to operate and then charge that, right? Mm-hmm. So again, if you are like, okay, well, you know what? I know I have to think about taxes. I know I have to think about payroll taxes, right? So for me, that's why I tell people I don't do work for free. I have employees. They need to get paid. So sorry, I don't know, because I know what it costs me to do business. So I'm unapologetic about what I'm going to charge because I know what it costs me to do business. I know that I have to pay taxes. I know that I have payroll taxes and workers' comp and insurance and all these other bills and rent and and you have all these bills. You start to be able to really charge what you're supposed to charge and do what you're supposed to do for your business and make the analysis that you need to make. So again, if I had to make a blanket, I would say, depending on how much you're making, 25%. However, that's not enough.
I feel like a lot of people going to rebuttal with what you just said too, though, is the reason why you know your numbers is because you're a CPA. How am I supposed to find out my numbers?
No, so the reason why I know my numbers is not because I'm a CPA, right? I know my numbers because that's like, okay, and I'll give an example. When I was I guess I was still in accounting, but when I was in corporate, what I did was I broke my paychecks down and my bills, and I coincide my bills with my pay. So if I had my phone bill, rent, and something else due during that pay period, then I broke it down. I always paid myself. I always kept that principle. I'm going to pay myself first. Even if I'm working for someone, I'm going to pay myself first. So I had a number on how much I wanted to pay myself. So I will put that money aside and then figure out, okay, well, all right, then I'm going to pay this, I'm going to pay that, I'm going to pay this. And I stuck to it, right? And so it's no different with a business. With a business, you have to figure out what you need to do. You need to figure out how much does it cost you to, we're going to use a t-shirt. How much does a t-shirt cost? How much does it cost you to print? How much is your packaging? How much is your shipping? How much, does your website cost you? How much does internet cost you? Are you hiring somebody to help you with these things? Are you working with a vendor that needs something? Are you getting, everything that goes into it, you have to write it down. And I think that people, try to ignore numbers. And I know a lot of people hate numbers, but you can't ignore the numbers. You have to really sit down. And so many people get caught up with, oh, this person is charging $25. That's great. But can you afford to charge $25? Is their quality different from yours? right? And so you have to really think about those things. And I also have a lot of people who feel like, oh man, like maybe I'll charge a little bit now, but then a lot later. Don't do that. Don't do that, because guess what you're doing when you are promoting your business, when people click on your website, you are finding your customer. So if you decide to charge a little bit now because you didn't do your numbers, but then you finally realize like, oh man, I need to charge like double that. What happened is you may lose some clients, right? Because they may be like, whoa, I'm not paying her that. That's not what that's not what he or she was charging before, right? So you kind of have to be mindful of those things. So it's not because I'm a CPA, it's that I'm willing to sit down and do the work to really understand. Because I mean, I'm a CPA, but it's just like the hairdresser that doesn't do her hair, right? Like I still have to make time to look at these things and consider these things, because my goal is to operate a profitable business. I have, employees. So and I don't want people to think like what I'm saying is very difficult to do. Write it down on a piece of paper, put it in Excel, whatever you need to do. What is it taking you to operate your business? That is very important, and that you need to know. If you don't know your numbers, you don't know your business. I always say that. If you
Hey,
don't know your numbers, you don't know your business.
Because that's really like important though, even down to like you said, the Wi-Fi, the website costs, like all of those numbers, they do play a cost. And just thinking about how much you should charge overall, like all of the softwares that it costs to really maintain your business.
They add up.
Like the softwares add up really quick.
Yes.
And that's monthly. Like if you're not paying for the year subscription, that's a monthly bill that's coming every month, and you need those in order to operate. Mm-hmm. And I see we have some more questions flowing into the Q&A.
Okay.
Let's see. One of them's regarding cryptocurrency. I know we said we'll talk about that one next time, y'all.
We're gonna talk about that one next time, guys.
Let's see. I have Joe. He said, could you speak on tax requirements as an independent contractor?
Sure. So your tax requirements as an independent contractor, when you are required to include your 1099 that you receive, or any other income that you receive, you are required to report that in your income. Make sure that you are taking into account all of your expenses associated with you acquiring or obtaining that income. That's super important. In regards to due dates, your due date is April 15th. And you do file your business taxes and your personal taxes together. Okay, so that is pretty much the requirement for an independent contractor.
Well, I hope that helps you out, Joe. I got one from Clifton. I have a K1 from an investment. The business operates in several states. Do I need to file 9 resident returns in each one of those states?
Okay, hold on. You have one business that operates in 9 states. Do they need to report? No. So one, you're only a resident of one state. It depends on where you made that income at, right? So that would depend. And on the business side, that should have been taken care of in terms of filing where the business was formed at. But in regards to you paying, it really depends on where the money is being made and how the money is being made, right? I would probably need more of a consultation, like more of a communication with that one, because that depends, right? Like if you sold 9 books in 9 different states, yes, you owe all those state sales taxes, but your resident state, you don't owe them income tax, right? Just because you ship the book to their state. Now, if you have real estate,
though, that you owe all of those different state sales taxes, I didn't know that part.
And so that's why when these the Shopify's have these things where they will withhold your taxes, or whatever platform they're going to withhold your taxes for you. That's something to consider and look into. And I have a lot of people like trying to like sell on Amazon, but then they're running into this thing where, oh my God, I want to sell on Amazon, but I still need to file taxes in all of these states. Like, what do I do? Right? That's you creating accounts and filing with all these different states. Again, what you're selling your product for, does that equate to you being able to pay to file taxes in all those states.
So you have to register for each one of those states, like
Yeah.
yeah.
New York don't care nothing about Texas. Texas don't care nothing about Georgia. Nobody don't care. They just want their money.
Sheesh. Well, that's something very interesting to think about, though, especially with the way that e-commerce is starting to grow so rapidly. The fact
Mhm.
you have to be conscious and cognizant of the people that you're actually going to have to pay, because it is easy to make money online from all of these different states. But once again, like you said, whenever people are opting out of withholding these taxes, you got to consider that. Like, this is something that's going to
Mhm.
be coming back to bite you in the ass if you're not ready.
Yes, those again, you could be ready. You just got to know what's ahead of you and factor that into your costs. It's important.
So Clifton, the person that said about the K1, it said it's not their business, but they're invested into the business.
No, so he's just responsible for filing his K1 with his taxes. So you just file your taxes, include your K1. Your income is going to be included in your resident state and you're fine.
Also, Abraham says, I just want to say thank you for the great information for the
You're
restaurant.
welcome.
I may have not been prepared, but at least I know I have a better understanding now.
No problem. You are more than welcome.
Clifton also says thank you. Let's see
You're
what else.
welcome.
Do we have any other questions in the chat? This is so important. Let's see about what they're saying on YouTube. Any advice slash recommendations on filing taxes on gains from stocks slash options? Any information will be greatly appreciated.
I'm sorry, read that again. I was
Any
trying to
advice slash
connect something.
recommendations on filing taxes from capital gains from stocks slash options?
Well, honestly, capital gains are really set in stone. They have their own capital gains tax rates. What I will say, depending on how active you are, you can qualify for trader status, which just pretty much means that instead of your income being seen as capital gains income, it will be seen as, income, earned income. So, well, business income. So
Why is that again?
so if you're trader status, right? So trader status just really means that this is, what you do. You are a trader. So instead of this look as being as something that's happening passively, it's something that's happening actively. And if something is happening actively, then that means that this is your business, right? So if this is your business, you should be able to recognize the income coming into the business as well as all of the expenses that you're incurring in order to generate this income, right? So if you are, able to qualify for trader status, great. But if not, again, a lot of people will be like, oh, well, I work and I want to claim trader status. It's very difficult to do because one, you need a certain amount of trades and a certain amount of hours in order to qualify for trader status. So that is, that's important.
Hmm. Okay, so I think the person with the cryptocurrency question was along those lines, because they just sent like three different messages. Let me read this. I received two 1099Bs from two platforms that I use to manage my crypto. I buy from one platform because it's cheaper to move it to another. Do I have to consider transferring from the first platform and selling my asset to pay on taxes? If never so, should I move it but give them my 1099 as if it is a short-term investment sale? Hmm. So let's see. And then he goes on to ask, if you want to day trade, should you in a system as a S Corp or LLC? Which one would be better?
An S corp would be better in regards to the crypto. I can't really give advice on crypto because I need crypto is very sensitive. Crypto is one of those things where if you are not, it's like the quickest way to get audited right now, to be honest with you, because the IRS does not have a control over it. And when they don't have control over things, they audit it very heavily because again, they don't have control over it. So in regard, I see a couple different scenarios with clients where, they're buying from one, transferring from another. And unless I really see everything like laid out, that's why I'm like, yeah, in terms of crypto, I don't really want to discuss it too much because crypto is very person specific, right? Depending on who they're trading with, who they're making transfers from, at what amount they made the transfer, and all of those things play a great deal.
Let's see. Did I miss the answer on how settlements are taxed? I didn't see that one. I didn't even see a question. Hey, Charlotte, I didn't see a question on how settlements are taxed. Could you repeat that question, please? Okay, so Charlotte says, with your current understanding of the tax code, if your client was awarded settlement in a disability discrimination case, the funds being classified as wages and attorney fees, how much of the total settlement would you advise them to set aside from the IRS?
That it would depend. I can't really say how much they should set aside. I really don't like the how much should I set aside questions because I don't know the amount. I don't know, also like how much are the fees? How much was the settlement? How much, all of those things matter because again, right? But what I will say, how you are taxed is pretty much you are going to see, the income, and then, you will have your 1099 for the income, and then you can write off all of the expenses that you incurred relating to that income, right? And then from there, that's when you're taxed based on the remainder of, what's left. And again, I don't know what the amount is, so it's very hard to say what that percentage should be.
Okay, well, thank you for that. So we got some more questions.
Okay.
So once again, Erica, she's asking, so for traders, we do need an S corp, and are we allowed to file the amount of money we lost through trading?
So how it works when you are a trader, if you have capital losses, then that capital loss does have a cap that you can claim every single year, $3,000. That, and then everything else outside of that is carried forward indefinitely, meaning that you can carry forward your losses every single year until you've completely exhausted your losses.
Thank you for that. Let's see. If you have an LLC, what are your obligations during tax time? I'm converting my hustle / information into a legitimate business. So you gotta pay what you owe. You gotta pay what you made.
So pretty much in terms of the requirements, if you made $400 or more, you are required to file your taxes. So just to put that out there in regards to the retirement. And if what was the other question? Basically, what was the requirements? You have to file your business taxes with your personal taxes, and your due date is April 15th. Make sure that you have a business bank account. Everything is going through that business bank account. You're holding on to your receipts. And you are having the conversation about your taxes before the year is over.
So I got another one from YouTube, and I think you just answered this. You said if you made at least $400 or more on the business, you have to file your taxes, correct?
Yes.
Okay, they're saying, I have a service-based business. I only made 10K this year. I'm looking to buy a house. Should I write off the 10K or should I guess basically file it? They say, how much would I have to pay if I didn't? That part, I think that's a what if kind of question again.
That's definitely a what if, because it's going to be included on top of your other earned income. And then based on what that total income is, that's what the tax is going to be based off of. In regards to, right, I can't tell you to write things off or not write things off. I'm trying to keep my license. I can't tell you whether you should write things off. The proper way is that you should be reporting your income and you should be reporting your expenses, right? So I'm going to give you the politically correct answer.
Report your income and report your expense.
We want to
Because-
see me on Tax
Yeah,
Tuesdays.
we don't need y'all, the people all up in your business, and we don't need Shaquana losing her license.
Yes.
Let me see.
But I mean, what to the person that's asking about that, one thing to consider is if you start including your business income, right? That opens up, you just have to make sure that again, all of your things are in line, because that's now part of your income and will also be looked at when it's time for you to qualify for your home, right? So they are going to look at those things. So just make sure, whatever's on your taxes that you are substantiating.
Okay, let's see. If I had anything else I wanted to ask you. I think that's all I have for this tonight's episode of Tax Talk Tuesday. Does anyone else have any more questions, any more concerns for Shaquana? I don't want to hold you up too long. I know you just got off the plane. You're probably tired.
Well, I'm here. I'm here.
Do we have any more questions? Thank y'all, everyone who tapped in with us tonight. Appreciate y'all for tuning in. Hopefully, we were able to answer everything thoroughly. Our girl Shaquana, she's a beast. As she stated before, she is currently not accepting new clients that need to have their stuff done before the 15th. But if you're trying to get an amendment, do it later down the line. She can help y'all out.
An extension, yes, extension.
Not
Yes,
an
so if you want, no, not an amendment. No,
Not
I don't want people filing taxes twice if they don't need to. So yeah, if you guys are willing to put in an extension for us to connect after the deadlines, then that would be great. But right now, I would be doing you guys a disservice and my team a disservice if I continue to take on clients, because there's a lot of clients in the pipeline right now, and deadlines are quickly approaching. And so this year, I had to kind of cut it off. But again, that extension allows you an additional 6 months. So I would love to work with you guys, but we just have to file an extension for us to do so.
Let's see, do we have anything else in here? Appreciate everybody. They saying thank you. Appreciate everybody.
You're welcome. Thank you so much for having me.
You're welcome. You have a good night, Shaquana.
All right, you too.
We got somebody raising their hand. Nope, they're done. Okay.
All right.
All right. Well, you have a good one, ma'am.
All right, you too. Good night.
Good night.